Okay, so this is really cool. Today's guest, Chuck Failla, actually reached out to me because he saw that I had launched phase one of Podbox. Chuck does a ton of podcasts and online video with his goRIA program, and he knows firsthand how important it is for guests to have a high quality microphone setup so they sound their best on his show and the online conferences he produces. So I sent Chuck a high quality, fully assembled microphone setup from podbox.com. The same setup I'm using for this ad read, actually. All he had to do was open the box, take it out, and plug it into his computer, and he was ready for our podcast recording session. And as you'll hear, he sounds fantastic. Whether you are a podcast host wanting your guests to sound their best, or you're going to be a guest on someone else's show, you really should swing by podbox.com and give one of our microphone setups a try. Your audience will love the way you sound. Okay, now on to the show. Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast. This week on the show, I have Chuck Failla, founder and CEO of Sovereign Financial Group, back with me for an update on the goRIA initiative he launched a couple of years ago. If you're a longtime fan of this show, you might remember that I had Chuck on shortly after he got the program rolling via a series of online conferences called RIA Labs, which eventually translated to live in-person events. You are absolutely going to love this conversation. We cover a ton of really interesting stuff for RIAs and those who might want to go RIA. You see what I did there? Anyway, before we get to the conversation with Chuck, please make sure you subscribe to the podcast on Apple Podcasts, Spotify, Google Play, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a guest or a topic for the show, hit me up. I'm basically at Mike Langford everywhere, or you can shoot me an email, podcast@finservmarketing.com. Okay, let's get to the conversation with Chuck Failla. Well, Chuck Failla, welcome back to the Modern Financial Advisor Podcast. It's so wonderful to see you. Thank you for coming on the show, man.
Oh, Mike, you bet. It was great the first time, and I'm really looking forward to the second time around. Thanks for having me back.
You're absolutely. You know what's really fun about you is like, I got to catch you kind of near the beginning of a journey that you're on now, and you're a little further down. I love that type of stuff. Like, I don't want to say I discovered you, Chuck, but I feel in my mind, I had a little bit of discovery of like this guy, right? So and what makes you so special to me, and I genuinely mean this, is, every once in a while, like I get to spend time with someone who fits like kind of the definition of a man or a woman who's on a mission. And there's just this energy about you. Or those types of people, and because they're working on something that's frankly inspiring, right? Just to observe the person from afar and have the luxury of being with them sometimes. So you, sir, over the past couple of years have been an exemplary example of a man on a mission with your goRIA endeavors. And we're going to be diving deep into that today. So I guess a good way of kicking it off is for those in the audience who might not fully understand or have heard of goRIA, maybe give us like an overview of what the program is all about.
You bet. And first of all, thank you for those kind and generous words. I appreciate that. And coming from you, that means a lot. I mean, I've been watching you for a long time, and in addition to microphone tips, I've been getting a lot of tips from you, and I appreciate all of that. So goRIA, in the most basic terms, it's a media outlet that I created about 3 years ago, with the sole intent of educating advisors about the benefits of the RIA space. Plain and simple.
Yeah.
And I did this in something too that I think you know about me, Mike. I hate disingenuousness. And I think we talked about this on the last podcast too. Am I doing this to save the world from the broker-dealer space and things of this nature? It's not quite that. There is some self-motivation here. And I always like to be really upfront about that. And 5 years ago, I went RIA myself. Dropped my Series 7, dropped my 24, went cold turkey into the fee-only RIA space, and I was happy I did it. Only wish I did it a little bit sooner. And the intent back then, and this is 5 years ago, was to build a firm of about 40 like-minded financial planning-oriented advisors and get to about $2 billion. So the first year into that process, I wanted to build the infrastructure to accommodate 40 advisors and a few $1 billion under management, and I completely flubbed it up. Started again the second year. rebuilt the tech stack with the right technology for what we wanted to do. And by the end of year 2, so the beginning of year 3, we had the infrastructure to support 40 plus advisors and a couple few $1 billion. Then I wanted to get the word out that Sovereign was looking for financial planning oriented
Mm.
advisors that wanted to go RIA but didn't want to do all the back office. And I thought, what better way to get the message out than through educational marketing?
Yeah.
And I've always been a big believer that to receive value, one must be ready to give value. And so that was the whole impetus and the origin story, if you will, of goRIA. And it was designed to be a media outlet to educate tens of thousands of advisors about the benefit of the RIA space, with the hope that dozens of those advisors would find their way to Sovereign. Plain and simple, and that's just the honest truth. And here we are about 3 years into the endeavor, and we're about halfway to our goal. We're just shy of 20 advisors and $1 billion. We'll get to that by the end of next quarter based on our onboarding we have right now. And we feel we'll get to that final goal of 40 advisors and 2 billion
Yeah.
within the next couple of years after this. So I did this on my own for about a year with some really amazingly good success. Just doing it real amateur like, almost like a
Yeah.
Blair Witch type of situation. And then about a year into this, I reached out to some good friends I have at Investment News. I said, look, guys, I'm having some pretty good success with this goRIA.com. How about we partner? And they loved the idea. And ever since that point, and this is now 2 years ago, it's now goRIA fueled by Investment News with what's just been a wonderful partnership. And it's really blossomed into something meaningful. And I'm happy to be a part of it.
I love it. I love it. It is, and I love that you just touched on, things that maybe folks in the audience are wondering about. Like, first of all, I think anybody who hears is like, oh, this is really generous. This guy who's got a very successful RIA himself is out there, offering some roadmaps and some insights into why you might want to do this and so forth. But you have some self-interest there. It doesn't mean it's,
Sure.
it doesn't take away from the generosity and the thought leadership and the education and commitment to the space. But it's okay. Your thought process there is kind of like what you see sometimes in the technology space, where it's like, listen, we want to push forward this concept, and if we happen to get 1% market share, it's billions of dollars for us, right? In your case, it's like, hey,
Exactly.
if we get thousands of people who are already maybe thinking about going RIA to do so, some of them might hear me and see me as a thought leader and hear and sharing this stuff and go, yeah, Sovereign's the type of place I'd like to hang my shingle. Let's get it on.
Yeah. And that's what it boils down to, and it's almost like, revealing to your young children, Santa Claus, Tooth Fairy, Bunny Rabbit, not all exactly what it is, right? There's something else behind that. And that's okay, right?
Yeah.
It's okay. Like most people that create content, if we're being very honest, there's a reason for it.
Sure.
Altruism, sure. Spreading information, absolutely. But there's got to be something that's back and
Yeah.
forth. And there's nothing wrong with that, right?
Yeah.
What I have the bigger problem with is people that want value and give nothing.
Yeah.
But for people that want value and are prepared to give value first,
Yeah.
all day long, and that's what we're doing here with goRIA.
I love it. Just one more thing on this just concept of like why because I think this is true for advisors who are listening to this episode. They can do what you're doing in whatever area of life. I always call it creating your own gravity, right? So I produce podcasts, but I also host events. And what I have noticed is because I do that, people will actively seek me out because I've done that. And it's not like I'm taking on this massive heavy burden of when I do those things, but it's like you elevate yourself to, hey, this is a person who really cares about it. This is a person obviously who knows about these things and somebody who's really plugged into the space. I'm going to have to reach out to that person. So whatever that is for the advisors in the audience, like find a way to create your own gravity. If it is for a recruiting perspective, you're trying to grow your firm and bring other advisors on, do that. If it's something like, as an example, you're a financial advisor who wants to have a lot of clients from the tech sector, so, okay, great. We'll start having events that bring in tech people and be the person who hosts that and talks about it. And you'll be surprised at how many people beat a path to your door.
Absolutely. And just one thing I want to re-highlight what you just said is don't worry if you're only getting 1% of that.
Yeah.
Right. If you're going to deliver value to 100 people and only one turns into a client, that's a win. Right. And the 99 people, good for them. They got some great information. It wasn't a fit. But, as long as you're getting what you're looking for, what do I care if I'm educating tens of thousands of people, which we are definitely now with Investment News. I
Yeah.
mean, the breadth of eyeballs that we have now with the Investment News partnership is tens of thousands plus plus.
Yeah.
And here we are, Sovereign, we're at, we recruited what, 15 advisors out of
Yeah.
those 30, 40, 50,000 advisors that have heard this
Yeah.
over the past couple of years. I'm so completely cool with that. That's fine.
Okay.
It's a
That is
good value
awesome.
for everyone.
It 100% is. And it's, that 1% concept, look, this industry was built on law of large numbers, right? Like,
Yes.
when people way back in the olden days, when people were stockbrokers and not calling themselves financial advisors, they were dialing for dollars. They were making 100 plus phone calls a day, hoping
A
to get,
hundred, a
yeah.
hundred. Let me just correct you there a little bit.
Go
I
ahead.
was one of those cold calling stockbrokers
Yeah.
in New York City 30 years ago. I mean, I
Yeah.
was in the thick of it. We've all seen
Yeah.
the movie Wolf of Wall Street.
Yeah.
It was not terribly dissimilar. It
Yeah.
was a lot of fun. It was like working in a frat house,
Yeah.
and it was minimum 300 to 500 dials a day.
So think about that. So you're talking about
Yeah.
like, okay, we're going to put it on an event, or we're going to do a podcast, or a series of webinars, whatever, educating people on a certain thing. Don't be disappointed if like, well, we had X amount of hundreds of people show up and I only got one account. It's like, yeah, dude, you know how hard it was back in the old days? People just like banging the phone like all the time, or knocking on doors. We still get the occasional. Was it Edward Jones? Is that the one
Edward
that
Jones
knocks
still
on your
does
door?
that, which is amazing to me. But yeah,
I actually kind of like it. I'm not in the market for the services, but it's happened a few times that we've lived here for a little over a decade. I've had a couple of them knock on the door. I'm always kind of of all the people who knock on my door, I think you're my favorite people. You're like warm and friendly.
that's right.
So,
But that's true. Don't be afraid for the work, and don't worry that 99 out of 100 don't, as long as 1 out of 100 does, and that's generally a pretty good ratio.
yeah, absolutely. So, you've mentioned Investment News a couple of times, and the partnership and how you're doing it. And it's funny because I first reached out to Jeff Benjamin at Investment
Sure.
News at the time because there was an article or something published and it mentioned the RIA Labs thing coming up. And some of the concepts were around future-proofing the tech stack for an RIA business. And I said, hey, Jeff, would you come on the podcast and we'll talk to you about this type of stuff? He's like, you know who you need to talk to? You need to talk to Chuck. So then I had you on the podcast and we talked about the RIA Labs events you had coming up. And you talked about some of the things you've already talked about, like how do you cobble together some Zoom stuff to just do some educational type marketing, if you will.
Mm-hmm.
And I absolutely love that conversation. And so anybody who hasn't heard that go back, I'll link up that previous episode so they can dive in. But now that RIA Labs and those early efforts have fully morphed into goRIA as a legitimate ongoing endeavor, what would you say some of the most important or impactful things that you've learned over these last, you mentioned 3 years. For me, it's 2 years. That's when you and I first started chatting. Yes. What have been some of the big things that you've learned that you maybe didn't see coming?
Yeah, with regards to the goRIA itself.
Yeah, with the goRIA or just heck, I mean, anything, right? So you've gone through, you're on this journey, right? You're walking down the path and you're like, this is, I didn't expect this out of this. I'm learning some new stuff.
Yeah. So I tell you what, I'll start with the goRIA, and I do have like a follow-up on the future proof on technology, which I think is kind of topical. Awesome. And I know you do a lot with tech, so I would like to get your thoughts on this too.
Yeah.
So from the goRIA, the one thing I have really come to learn is there are so many great experts in this field that are willing to share information. And, everyone's willing to share information on a podcast because they're getting exposure. But I'm talking about when the camera is off, right? So I do a lot of conferences now, speaking at conferences, attending conferences. And I say this all the time. And this is sort of an old Seinfeld reference, right?
Yeah.
You remember that episode, The Muffin Top?
Yes.
Does that resonate with you, right?
Yeah, so, top of the muffin to you. Yeah.
Yes.
Absolutely.
So for those in the audience that haven't seen that, or maybe not Seinfeld fans, Elaine started this entire shop that had only the top of the muffin, which she would argue, and I would agree, is the best part of the muffin top.
My wife and I, by the way, this is how you know you're a perfect couple. I am the muffin top guy. She likes the stump. I don't know what
She's
I'm
the
like,
stump? Yeah.
she likes just a kind of a plain cake type of person. She doesn't want the crust on the top. I'm like, I think you're insane, but I
Ah.
will gladly exchange stump for top any day. So
Well, that is a perfect combo right there. So
yeah.
the muffin top, which is my personal favorite part of the muffin, as it relates to these conferences, and this is what I've really learned,
Yeah.
is what happens in between the sessions, right? So I do a lot of
Yeah.
conferences, both as an attendee and a speaker at. As a matter of fact, I just chaired the most recent one for Investment News, which was great, the RIA Connect. But the best part, content is great, the presentations are great, the fireside chats are great. But the best part is what happens in between those sessions,
Yeah.
what happens at breakfast and at lunch and at dinner and drinks afterwards. And I'm always floored by how open a lot of advisors are, most advisors are in this business. And not, again, the camera's not on, they're getting no publicity, but just sharing what's working, what's not working at their respective shops. And I find that to be incredibly valuable as I produce content for goRIA,
Mm.
and even more valuable as the CEO of Sovereign, as we're trying to figure out how to do this and that and the other thing better. The flow of information, again, when the camera's not rolling,
Yeah.
is amazing. So, I'm a huge fan of conferences, and I really advocate for advisors to get out and do more conferences. Get the content for sure, but spend the time to do the networking. And you will be very, very pleasantly surprised on how open other advisors are to share the real innards for what's working and not at their firm.
That's great. It's that rising tide mentality, right? Like, hey, if I help
Hmm.
you improve your business, it helps us all improve, right? And
Yeah.
I think most advisors know in this industry, like, each individual advisor can only really handle what, probably max 150. Now, maybe with some new technology advancements, they can increase that
Hmm.
number of clients that they can actually serve effectively. But there's only so many clients you can have, right? So you can try to level up and get, higher value clients over the years. But there's enough for everybody because if you look at the statistics, and I don't have them in front of me, but it's frighteningly small how many Americans actually have a financial advisor. Like, it'll
Hmm.
stun you. So there's room for growth for everybody. So we should be wanting everyone to grow.
Yeah. And for the most part, I find advisors are very willing and able to do that, which is great.
Yeah. So now you mentioned you teed up that you wanted to
Yes.
follow up on the tech. I can't wait to hear what you got. What stuff have you learned, or are you noodling on tech wise?
Yeah. So, under the category of future proofing your technology stack as an RIA, the key is integration, right?
Yeah.
Everything needs to integrate. And most things integrate pretty well, but not 100% yet.
Yeah.
So what we're just exploring now, and I think this is a really great concept. It's called a data warehouse or a data lake. Have you come across this concept before?
I actually have. I just had, and this episode hasn't been published yet, but I just did the interview with Gauthier Vincent, GV, as he's called, from Deloitte, and their wealth
Hmm.
management focus. And they just published a new paper doing a lot of research on this. And he was talking about the need to modernize the data sources
Hmm.
across wealth management because, in his mind, a lot of focus has been on the client facing and the advisor facing tech, right? Like, so that's been very modernized, a UI that you and I would see as an advisor or as a client. Like, if I would log in, if I was a client of Sovereign, might start looking like all the big firms when I open up my smartphone or whatever. That's great,
Yeah.
but on the back end, a lot of that stuff is still very legacy, or in the mid office, if you want to call it. A lot of us think about backup, but like, the clerical stuff is still very manual and very
Yes.
dated. So that's my high level. Yes, I'm aware of it, and it's becoming urgent. What are you hearing?
Yeah. Well, here's the thing. It's such a great idea. So basically, what a data warehouse does, it acts as a central repository for all of your data.
Yeah,
So for us, our tech stack is Orion, Salesforce, eMoney. Those are the three main
yeah,
players. And they all talk to each other quite well. Not perfectly,
yeah,
quite well. And what we're trying to do is get everything into our instance of Salesforce, which means our advisors could live there 99% of the time.
yeah,
From client notes, of course, tracking phone calls, you bet. But we also want to be able to launch trading and new
yeah.
account forms and all this other stuff. And that requires, probably we've identified about 17 fields that we still
Wow.
need from Orion that doesn't natively integrate through APIs with Salesforce yet, and we don't want to wait for it. It probably will happen. We don't want to wait. So what a data warehouse does is it allows you to have your own central repository that you own. You own
Yeah.
that data warehouse, and it can go in to Orion and pull out all the things that you want. And
Yeah.
it could pull all the things you want from eMoney and Salesforce. Now it all lives in the data warehouse. Then it can manipulate it, crunch it, do whatever you want to do with it, and then send it back out.
Yeah.
The end result is, and we've just started looking into this, but the end result should be we can put everything we want into Salesforce and not have to wait for our vendors to get their integrations to
Right.
100%. Right now, they're maybe 80%. But if you don't want to wait and you want to future proof, right? Let's say there's a fourth technology that we haven't even thought of yet, right?
Right.
How often does that happen? Well, if you have this data warehouse set, that one too, if they're not natively integrated, you could go ahead and pull that data into your own data warehouse and push it
Yep.
wherever you want. That I think is a really, really cool thing. And that's going to start coming right to the fore. I was actually talking recently with Joel Bruckstein, who does
Yep.
the T3. And I think that's going to be a big focus of his conference coming up too. It's going to be all over the place soon.
So that concept of data warehouse is not a new one from a technology perspective, right? So I mean, I can
Right.
remember, geez, like 20 plus years ago, learning about database programming, right? Just like how to create good data. This is back when I was in grad school, like how do you create a database and this and that. And my co-founder, because we were trying to do a startup while we were in grad school.
Uh-huh.
So my co-founder was a technologist, like MIT, super smarty pants type of guy.
Mm-hmm.
And he's like, listen, Mike, never store data twice. Like it was basically like, so as we're building out these databases, like there's a table for all of the customer, as an example, customer IDs and the customer addresses like that. That should be stored in one place and fed everywhere else, right? And of course, 20 something years ago, storage was way more expensive. Computing power was way more expensive. And now we have cloud backup. So it's not to mean that this is not to mean that you only have one copy on a terabyte drive somewhere
Yes.
of your stuff. It's like, no, of course it's backed up in the cloud or some other, system of redundancy. But the notion of you're talking about there is very apt. It's like, look, there should be a master record, right? And you hear about this with blockchain a lot, right? The blockchain technology. It's like there should be a master record for all information for your firm, and it should feed every place else. There's no reason why people on your team should be, as you said, typing stuff into Orion and then typing the same stuff into Salesforce and then taking the same, right? I should
Typing it into their order form for the
Yeah.
trades. That's driving all of us crazy, myself included. I mean, I'm an
Yeah.
advisor as well, and I just don't like it.
Well, and then you should also, to your point, future proofing. Where the future proofing stuff comes in is, look, Orion's doing great company, very well respected. What happens if something happens to Orion, right? How quickly could I move off of Orion? Well, I don't know, right? Like, so I don't want,
Sure.
so I want to be able to switch, right? So if as to your point, if you and your clients own the data and and it's in a place that you control and it's flexible, I have the ability to switch over from Orion to XYZ firm that might not even exist now,
I wasn't even thinking in those terms yet, but that is true, right? I mean, I can't think of anything but Orion because we're huge fans of them.
Yeah, for
But I
sure.
tell you what, when I had a BlackBerry, I was like, how could it possibly get better than this?
That is a
And it
perfect
did.
example. Yeah.
You
So
never know.
perfect.
It's like BlackBerry, how could this possibly get any better? This is great.
That's right. It's absolutely a perfect example. And we think about it here. We're producing podcasts and videos and stuff, and we think about it all the time. Like, what happens if a better solution comes along? So our tech's got to be flexible. That our editing technology and all that type of stuff. Like, can it interact with the things we want to do? And then what if something new and awesome? Because switching cost is a real deal, right? There's a reason why some of the stuff that end clients would be horrified at some stuff that's still working on mainframe type technology in the financial services world. Why? Because it works and the conversion cost is astronomically expensive and time consuming, right? So it takes a while to move stuff, but
Yep. So I think we'll hear a lot more of this coming down the pike.
Yeah, for
Data
sure.
warehouse, data lake, whatever. I think there's a few different ways to refer to it. But
Yeah.
and the other thing too, the last thing I'll say about this is it's getting to the point where, as you mentioned, this is not new, but it's new to be affordable for $1 billion shop.
Yes,
which we are almost. I'm rounding up a little bit. We're like
it's fine.
850, I think.
I'm not gonna tell
But
anybody.
yeah, okay, just between us. Um, but even more so, like we're a sub-billion-dollar shop, and we're thinking about a data
Yeah,
warehouse, right? Because the advancements have brought the cost down.
yeah,
So you don't need to be, $100 billion
that's right.
Carson Group type of thing to afford this. You could be, maybe not a state registered RIA. I think that'd be overkill for them. But even the 500 million to $1 billion shop, they can start thinking about this,
Yeah,
especially if you're like us and we intend to be a $2 or $3 billion shop, because that's going to help
yeah,
future proof us. And I think that's going to be one of the best things we will do for our tech stack
yeah.
is this here one source of truth.
Well, it's such a great point that you make that, and again, even firms like yours that are a billion, it's a small company, right? And then the
Absolutely.
technology that is available to small companies now is breathtaking, right? Just think about like the fact that we're recording, we're using a solution called Riverside, right? So, we're talking to each other 1,000 miles away from each other
Hmm.
and seeing each other crystal clear and hearing each other perfectly. This technology was insanely expensive a decade or so ago. You could do Skype or
Hmm.
whatever and cobble together a couple of things, but this is much more expensive than it is now. And uh, storage, like things like Dropbox or Google Drive or whatever you're using, that's incredibly cheap comparatively. The fact that I can just upload something and I know that everybody on my team has it. Like
Yep.
the files from this video are going to be uploaded to Dropbox, and everybody can just like grab it, do the editing stuff that they need to do. It's brilliant. So when I think about the old Bill Gates quote, right, where he says, people tend to overestimate how much change will happen in 2 years, but underestimate how much things going to happen in a change in 10 years. I think we're here with that as well, right? So the stuff that you're mentioning, data lake and data storage, and uh, I think some advisors who are, as you mentioned, state registered reps are really small might be like, it's beyond me. It's like, no, it'll be a real thing for you in a few years. You watch,
Yes, that's right.
you know?
It'll just keep coming down the scale ladder,
Yeah,
right? So what makes sense for $100 billion firm and then $1 billion firm will soon make sense for $100 million firm. I completely agree with that.
100%. So like, I wonder if on the flip side of things, if you've seen uh, some challenges for RIAs that are kind of becoming concerning is not the right that are common when you're out there in the goRIA stage. And you mentioned those side conversations, which I agree with you. Like that's my favorite part of conferences. Is like I like watching the people on
Hmm.
stage, but I really like meeting people and hear what's going on in their life.
Yeah.
Have you heard some recurring themes about what either current RIAs or those who are converting or facing today that you're like, hey, the industry needs to address this and we need to fix that as a problem to make life easier?
The one thing that comes up more than anything else is staffing, right? Getting the right people. That's a constant challenge because the RIA space is growing so much and it's just sucking all that talent into other firms. That's becoming a challenge, I think, for a lot of folks. And then it really is going to depend also who the advisor is. Is this an advisor looking to build his or her own shop,
Yeah,
right? Because that's a different set of challenges. Or is this advisor looking to plug into an existing firm? So, on the former, right, if you're looking to build your own shop, the good news is there's a tremendous amount of resources out there. That's also the bad news, right? It's like drinking from a fire hose. There's
yeah,
so
right.
much to choose from. And look, I mean, it happened to me. I chose the absolute wrong technology, not bad technology. It was bad for me, it wasn't
Sure.
bad technology, but it was absolutely wrong for what I was looking to do. So it's easy to get tripped up on that. What's the solution? Talk to people, right?
Yeah.
Join associations, right? I'm a member of the FPA, Financial Planning Association. Great place to network with people. Talk to someone that went RIA. What did you do for your tech stack? What did you wish you did differently? And if someone talks to me, I would tell them exactly what I would have done differently. And this is not to land base our former tech provider, who's a decent firm and a decent product. It was just not a good fit for us.
Sure.
And had I known a few things, I would have avoided that. Then on the latter, which is that advisor looking to join an RIA, the good news is there's a lot of different RAs to choose.
Yeah.
Again, bad news is exactly the same. There's a lot of RAs to choose from. So discerning what is going to be the right fit for you. And the only way to do that is to talk to a lot of folks. And as you're talking to these people, that's going to help you formulate what is important to you. What do you want to get out of the RI you're looking to join?
Yeah.
What do you want to have on your wish list? And then you're better armed to go in and speak with these other firms, of which I would say there's probably a good couple of hundred RIA firms that are legitimate choices to plug into, right?
Yeah.
You have maybe 10 of the big behemoths, but you have a good couple of hundred really good ones that are more of that boutique size to choose from as well. But first, talk to a lot of other advisors that already went RIA, that plugged into the behemoths, that plugged into the big, smaller ones, the mid-sized ones.
Yeah.
What do you like? What do you not like? So really the challenge, which is also the good news, is the same on both sides, which is so much choice. So
Yeah.
that's good, but it really means you got to do your homework to figure out what's going to be the right fit for you, whether it's what you want to build or what you want to join.
Great question. The talent question comes up a lot, and I think it's going to continue to come up. And the good thing is, we are starting to see the feeder system get better, in my opinion. So as an example, I just attended a conference here 2 weeks ago in Austin, put on by University of Texas, McCombs Business School, and they actually have a wealth management program now. Where they're effectively
Hmm.
graduating people who are interested in going to work in wealth management. Right, that's their
Mm-hmm.
and I know that my alma mater, Boston University, has a CFP, a CPA track, a CFA. Geez, like,
Mm-hmm.
anyway, they have those types of tracks where they're graduating wealth management focused folks as well, and I think that's growing. So that's really cool. We're going to have a crop of young folks who are coming out who understand the industry, have a better idea of like what they're looking to do. Whereas the old days, as you mentioned, you raised your hand and said, "Yeah, I'd like to be a stockbroker," and you kind of showed up and went through the mill, right? That type
Mm-hmm.
of stuff. But one thing that I've been hearing, and I wonder if you're talking about this in the goRIA community. One thing I've heard, and I've heard it multiple places, is that training is lacking.
Mm-hmm.
So young folks are coming in, and now when you got your start, even though it was a grind, you went through training. Here's how to call. Here's what you say. Here's how to handle
Yeah,
this objection.
you could call it that, but yeah, there was some training.
But you know what I'm saying? Like,
When we're off camera, I'll tell you what some of that training involved.
yeah,
But
sure.
yeah,
But back in earlier times, going back a couple of decades, in those times, larger firms
for sure.
spend more money on organized, systematic training for employees to make sure that everybody's on the same
Absolutely.
page. And because they know, hey, look, this is a numbers game. And if everybody does it this way, we get success, whatever.
Yep.
But I've been hearing this feedback, not just from younger folks, but actually from people who run companies who go, hey, listen, we need to do a better job training people because, let's just say you're a 5-person RIA and you get a new employee. It's easy to get frustrated that that person's not picking up on things that you've spent 3 decades accumulating all this knowledge in your head. It's like, no, this person,
Mm-hmm.
their ramp is going to be slower. So, have you been hearing about that, like about need for better training?
Yes, absolutely. And I think that is a function of the RIA space is very conducive for letting smaller companies flourish.
Yeah,
But when you're a smaller company, as we are, right, we don't have
yeah,
a training department,
right.
right? We have me and John, you know, and we're going to show you how to do this stuff, right?
Yeah,
And that's just being incredibly honest,
yeah,
right? It is
right.
what it is. So what does that mean for us smaller firms? Frankly, we have to hire more experienced people. We need to bring people on board that have that experience. And let's also make sure that we're differentiating advisor from administration, because
Sure,
those are
absolutely.
two very different functions. For us as a firm, we're not bringing on advisor trainees. We're bringing on people that have books of business
Yeah,
and we're supporting them. So we don't need to train them. They know what to do. We need to show them how to use our systems,
sure.
which we're quite proud of, but that's about it. But on the support side, the compliance side, the trading, I should say, we have to show them how we use our systems. And what works for us is bringing on experienced people
Yeah,
that don't need as much, basic training, if you will. But then what's really been our secret sauce for this is about a year ago, maybe a year and a half ago, we made the commitment to be a 100% remote firm.
mm.
100%. We have a bunch of offices, which I question every time I do my P&L each month. And we use those quite a bit for meeting with clients still, right? So our
Yeah,
advisors, we have, probably 7 or 8 offices now throughout the country. They usually go into the office, meet with the client. They try to stack. I know I certainly do. We have a New York City office. So I try to get there a couple times a week, but stack my appointments. So I'm only
yeah,
in there once or twice a week. But all of our admin, right? Our chief compliance officer is in Massachusetts. Our head trader is in Omaha. Our other compliance officer is in Utah, and so on and so
Yeah.
forth. 100% remote. And by doing that and accepting remote work as 100%, we were able to really find high quality people that we may not be able to find as easily if we're just looking right here in our backyard for an on site workforce. So that's been helpful for us.
Yeah.
Larger firms, they have a larger need for more people. So they have more established training programs. But what we are doing is we are in the process right now of putting everything into what we call SIB, sovereign in a box. So every time someone is doing something for compliance, for trading, for client support, we're documenting it in a way that creates essentially a manual for how to run sovereign,
Yeah.
with the idea that once that's complete, and we're pretty close to having that done, we should then be able to bring in anyone with some decent experience in compliance or trading or client support, and they could just follow this methodology, and allows me or one of our more senior administrative people at Sovereign to walk them through that policy procedures manual essentially and
Yeah.
get them up to speed faster. So the suggestion I guess I would have for smaller firms out there like mine is get those procedures documented, and that helps get more consistent outcome from the
Yeah.
procedures today, but also helps you in training in the future.
I tell you, I love everything you just shared there. And there's another benefit to doing what you're doing. So number one, you are systematizing for your current firm to get better and to understand and to look for efficiencies or whatever. So that documentation matters. It's kind of like journaling, right?
Yes.
You write down things what you did today or whatever, and you think, how could I do better? And sharing that knowledge. So it's going to improve your firm today. It's going to improve your firm in the future because you're going to be able to get better and have actually more organized processes, replicatable things.
Mhm.
But the other thing it does is it makes you more attractive as an acquisition target should in the future you want to sell this business. And everybody at some point in time will exit the business, right? Nobody lives forever. Father time's undefeated.
Right.
So you will eventually leave Sovereign. Either you'll sell the business or sell it or you have some sort of succession plan to the other advisors there.
Yes.
But the valuation on businesses that have really good systems, really good tech stacks that are well thought out and integrated is dramatically better than those that aren't, right? Because if I have to come in and create the systems and figure out like sift through all this mess, that's expense for me post acquisition, right? I want something that I can
Mhm.
grab and I know this thing's going to continue to operate efficiently. So I think it's really smart what you're doing there.
Yeah, no, absolutely. And also, one other thing I would just say on that is for continuity, right?
Yeah,
So I plan on being in this business for a good long time, as long as I have my mental faculties and all this,
yeah,
and hopefully that will be for a good long time. But you never know, right?
right, for
The
sure.
proverbial get hit by a bus, and that's what really kind of drove this. I was like, I really need to get this information out of my head,
Yeah,
right, and into some procedure manuals,
yeah,
because God forbid something happens to me. What I want to have the firm have the ability to do, because now it's not just my clients I'm responsible for. We're responsible for thousands of households at this
yeah.
point. Something happens to me, we have to make sure that we could just do a quick search, bring on someone that is fairly bright and just follows the manual, and within a day or two they're running sovereign, and that's the goal of having this
I
sovereign
love
in a
it.
box.
Um, while we're on the topic about continuity and potential future, especially, I didn't think about this for our conversation today, but it does dawn on me. And you know that we work with firms that deal with M&A and financing and so forth as clients. So we got Skyview Partners, an example.
Mm-hmm.
One of the things that's come up, and it actually came up at that conference I just mentioned, the UT conference, was many of the next generation folks in RIAs, right? So the junior advisors or what I mean, they could be senior advisors, just they don't currently have an ownership stake in the firm.
Mm-hmm.
They lack the financial capital to be the acquirers, right? So it's a challenge, right? So, if they were in an independent broker dealer setup, they would own their book of business effectively and be able to move wherever they wanted type of thing. And that's great, but again, it's their business. When you're in an RIA setup and you're an employee, and yes, you have call it your book of business, your clients that you're focused on. Uh, at some point in time, I'll use you as an example. You may choose to sell Sovereign or exit Sovereign. Uh, Ideally, the employees would want to like have some form of ownership or whatever, but like
Mhm.
Are you seeing, and I'm not talking about your specific stuff. I'm not talking, I don't want you to go
Sure,
necessarily,
sure.
open your books, but like, is that conversation happening in your GoRIA? Are people bringing up like, hey, how do we make it? So if Bob wanted to be able to buy the business, how do we make sure we have those conversations early so that 20 years from now, he may have the capital to do that, right? Like, you get where I'm going with that?
Yeah, absolutely. So that is a very big topic right now. And this whole idea that the valuations for firms has gotten so high that it
Yeah.
really is, to your point, really pricing out the G2, the next generation advisor.
Yeah.
So how is that addressed? Well, again, first you got to figure out what kind of firm this is. So Sovereign, we really are a platform for advisors. So all of our advisors own their book of business, right? So
Yeah.
it's a little bit different than some of the different models out there where you are a W 2 employee and
Yeah.
you're really a servicing advisor, not the primary advisor, is how
Yeah.
I generally categorize that. So it depends on how that looks. But that said, even our independent advisors, and I'll speak very frankly about Sovereign, I still own 100% of the firm. And we're at the point once you start scratching at $1 billion, you start getting a lot of calls from private equity, as I'm sure you would
Yeah.
imagine. And I don't have a big appetite to sell to private equity, but one option that we would look at is one of those minority stakes.
Yeah.
And this is a pretty common structure now where some private equity firms, and there are some, I'm sure you're familiar with them, that tend to more specialize in the minority stakes.
Yep.
What they will do is they will come in and give the cash. A large part of it's being used by the G2 advisor to buy into the firm. So you're
Yeah.
essentially leveraging that private equity minority interest to get the capital infusion to allow those G2 advisors to buy out the G1 founder.
Yeah.
And I think that's an interesting structure. The other thing that, frankly, we're looking at, because in about 3 to 5 years, I would like to sell off a chunk of Sovereign, right?
Yeah.
100%, that's a bit much. And I prefer to sell it off internally. But the other thing too that you could still do, as long as the founder is comfortable, and I happen to be, is to just hold the note, right? I don't
Yeah.
mind holding the note. But what I would want to see would be, a select group of our, more leadership oriented G2 advisors that we have at the firm right now, give them that ownership. I don't mind
Yeah.
financing it because I feel comfortable, that the trajectory of this firm is good. And I
Yeah.
think that that note is money good. It's going to be paid back by future earnings, which I feel very confident in. And it gives them that ownership to run the firm. I was actually just talking with my wife about this morning. No one's going to run the firm like an owner runs a firm,
Right.
ever, right? So there's got to be some equity involved there. And like with anything, you can't give something away. Something given away for free has no value, right? Or it's certainly not
Yeah.
treated with value. So there's got to be some buy-in. So something like, the G2 advisor puts in 20%, the G1 founder holds on to 80% as a note, and that's paid for through revenue over whatever period of time. But it gets that right level of ownership level mentality for that G2 in a way that's affordable. That's the route that we're probably going to go, right?
Yeah.
That's what I'm most comfortable with. And if we can't seem to make that work, then we would look at, some private equity as a minority interest to help the G2 advisors get into that position of ownership. But at
Yeah.
some point, someone besides me has to own this firm because, to your point, I don't think I'll live forever.
Yeah.
It'd be nice, but
But I
probably
think it's
won't happen.
something, yeah. And I'm glad you've put so much thought into it because I don't know that every owner has it. But, I really think this is an important part of the industry, right? As RIAs grow in scale and in numbers of advisors under the shop, like the ideal is to have the existing business just continue to be the existing business. But to your
Hmm.
point, if somebody comes in, has got a big honking check, and the current employee base just doesn't have the wherewithal to do it, and so if I was, advising RIAs, I'd start having this conversation now and start talking about what mechanisms can we put into place to make sure that you
Hmm.
are capital ready, right? That you have, as you mentioned, maybe the 20% to buy. You don't need to have 100% purchasing. The seller may take back a note. You also may be able to go get financing through some of
That's
the
right.
other capital firms, right?
Or a
But you
combination
can't
of
get
all
financing
three.
if you have nothing, right?
That's right.
Because one of the challenges we see, in the industry, and this is probably less of an issue in RIAs, but we definitely hear it in the IBD circles, is a lot of advisors live a $500,000 lifestyle on $400,000 worth of living, right? That you hear very frequently, like, man, these guys stink as business owners, right? Like they are very hand to mouth. Now, I think some of that is because they got their start as sales guys, right? They were just living on the sales commissions. And if you
Mhm.
have recurring revenue in the form of commission that comes in every quarter, rain or shine, it's real easy to get comfortable with that and think that's going to last forever.
Mhm.
But when the market dips, they all panic a little bit. But the notion, so younger advisors, G2, as you call it, start putting money away for, and investing, thinking that you may want to acquire the firm at some point in time or be in a position that you could do so so you can
That's
buy
right.
in.
And also to the G1 advisors, the founders like myself, start planting the seed with the G2, which
Yeah.
I have. I've been very open with them saying, look,
Yeah.
clearly, I'm not going to be running this firm forever. And my idea of retirement is doing the stuff that I most love.
Yeah.
Client interactions, podcasts like this, doing
Yeah.
events. If I could just do that, that's retirement for me.
Yeah.
What else would I want to do? I love it. What I don't want to do is, okay, the post payment report, and this happened this morning, didn't reconcile. All right, let's figure out why that happened.
Yeah.
I could live comfortably never doing that again in my entire life.
Yeah.
Right. So bringing people in to do that with the level of care that I do as an owner would be great. And then if I could just remove that final piece
Yeah.
of logistics off of my plate, I'll talk with clients, do financial planning and conferences as long as people will have
I
me.
love it. It's 100% that you find the things. I think in our last podcast we did together, you may have called it ABC, anybody but Chuck or something like that. It was
Oh,
some sort of job.
Sock. Someone other than Chuck. Sock.
Someone other than Chuck
Yeah,
Sock. That's
that's
right.
a job for
But
Sock. That's what we say.
that's right.
Often.
But it's a really smart thing. But because I'm like you, like I mean, look, I produce podcasts for a living, like in videos and so on. Like this doesn't get old. Talking to interesting people that I like, or even when I
Right.
talk to somebody I don't like, that's kind of fun too.
Absolutely. Sure.
So
Sure.
it's like I could do this until I'm 90 as long as like you said, as long as I have my faculties with me. It's pretty neat.
Mhm.
I used to like talking to my grandmother when she was 90. Why not? Like,
Sure. Sure.
so I got a couple more things I want to cover with you before I let
Yeah.
you go that I think these to me have been recurring themes as well that have been on the minds of a lot of advisory firms, and I'm seeing more and more of it. The first is more and more firms are starting to dip their toe into the concept of advising on things beyond marketable securities, right? So not just stocks, bonds, and mutual funds, and maybe some insurance. You're starting to see firms being willing to advise on real estate investing or investing in small local businesses or startup, getting involved in with angel funds or VC funds and so forth.
Mhm.
Now it requires slight changes to the models, right? That doesn't fit nicely into the AUM model. Are you seeing in your conversations with existing RIAs or new RIAs, like either a desire to like, hey, we want to be able to do this for our clients. We want to be more holistic. And we know, especially when we're dealing with affluent clients, they're going to have other reservoirs of wealth. That's not just, what's in their account, right? They're not going to, it's going to be a whole bunch of other stuff. I actually just met with a firm yesterday they were going to be producing a show for. They do real estate stuff and they're making it possible for advisors to be able to manage real estate investments for their clients. So I know they're getting demand for it. What are you seeing?
Well, we're definitely seeing a lot of interest in alternative investments.
Yeah.
But alternative investments these days, through the various platforms that are out there, they're getting pretty close to being like regular mutual
Right.
funds. Not quite, but kind of sort of, right?
Yeah.
They're a lot easier to get in and out of than they were 10 years ago. So we're definitely seeing a lot of that. So without question, going beyond just, publicly traded
Yeah.
ETFs and mutual funds for sure. But beyond those alternative investments, actually getting into, real bricks and mortar investing, like literally bricks and mortar investing, we're hearing about it. I'm not saying a ton of that necessarily, but it's out there.
Yeah.
But it's also not surprising because the theme that you did, I think, very correctly touch upon is more holistic, right? We
Yeah.
are far beyond the days where you're just picking stocks and funds for
Right.
someone, right? So at a minimum, it's financial planning at a minimum. Adding things like estate planning, which is something we're doing. And there's a lot of really cool wealth tech that's helping us do estate planning with
Yeah.
clients. Adding insurance services, tax services, things like that. And also the fact that there's easier ways to do non-AUM billing, right? So
Mm,
we could just bill on a subscription basis,
yeah.
on an hourly basis. So if you're helping someone do angel investing, what's the AUM that you charge on? I don't know,
Right.
but you have to figure out what your time is worth. Do
Yes.
you want to do it like as an hourly consultant? Do you want to say, I'm going to do this with you for a subscription of $2,000 a month or whatever you
Yeah.
want to do? So the good news is there's a lot of capability, especially in the RIA space, far more so than the
Yeah.
broker dealer, certainly the wirehouse space, where you can come up with more creative ways to bill to compensate you
Yeah.
for the time when there's no easy AUM to just go ahead and debit money from. So the systems are there to do it. The question is there the desire and hopefully the expertise, right, for these
Yeah.
advisors to be giving um, advice on angel investing. That's a
That's right.
pretty specialized thing. And just because you have a CFP or a CFA, can you
Right.
really give good advice on, seed capital investing?
Right. Yeah.
Maybe.
Yeah.
I'll leave that for the individual advisors to determine. What I can say is you could bill on it very easily these days.
Yeah, yeah. No, I'm glad you brought the expertise part up because I jokingly say on this podcast, seems like every other show, that the average client would be very surprised at how few financial advisors were finance majors in college.
Sure.
So most of them don't know how to do a lot of financial modeling and so forth. But that doesn't mean they aren't out there, or that you can't find a way to bring that expertise in house, right? That you couldn't hire that expertise or whatever. And now, as you
Right.
said, create a whole new revenue line. Like, hey, we've got a real estate investment expert in here who help you evaluate deals and so forth. And we also have somebody in here who has expertise in the
Hmm.
angel space and will help you look at and run some logical numbers. Or actually, friends with a firm here that here in Austin that they do reporting for startups, right? And the angel investors and VCs. And what they try to do is make the reporting consistent, just like you'd see from a public
Hmm.
company, right? So
Hmm.
that would be a solution. Like, hey, listen, if you're
Yeah.
going to be investing in angel investment, let's make sure we get consistent reporting from your portfolio companies so that you can look at it kind of in the same way we show you your investments that in performance, so
Yeah.
forth.
That's very cool. Kind of like a tear sheet, but for a private company. That's
Yeah,
really
yeah,
kind of neat to
yeah.
standardize that. I like that
Yeah,
idea a lot.
it's a smart idea. It's one of those, like, how come nobody ever thought of this before? Like, if
Yeah.
you're going to invest in a private company, that private company should be giving you some reporting that feels consistent from each private company.
Yeah. Love
Um,
that.
Last thing, and I think this will probably be the last thing before I have to let you go. I know we're up against it.
Hmm.
Is we got to talk a little AI.
Sure.
I got to get your take on what you're seeing because it's every single conference, every single thing I'm seeing now, somebody's mentioning it. So, what are your thoughts? Where do you see the most promise, or where should RAs look to shore up their flanks, if you will? Because I know some people are terrified of it, AI. I'm not one of them.
Hmm.
I'm observant and interested, but there's definitely seems to be two ends of the spectrum, right? Like, hey man, this is gonna be awesome, and then, oh my god, this is gonna kill us all.
Yeah, that's right.
I think there's a little bit of a medium. But what are your thoughts? Like, where are you seeing opportunities and risks for advisors that need to be shored up?
Sure. So I think the quote that you referenced before from Bill Gates is one that I love to use too. And it's
Yeah,
very true. People overestimate what it's going to do today and dramatically underestimate what it's going to do in 5 or 10 years. And I
yeah,
fully buy into that in
yeah.
general and very much so for AI. So I'll share with you two things that I'm seeing firsthand that AI is making an impact in our business today. One, and I could just speak because we happen to use Orion, they're rolling out, and I think a lot of other firms are, a portfolio analytics tool, which I
Mm,
think is brilliant. So you can upload a portfolio and AI will analyze it, compare and contrast between what you're proposing for this client and what the client has, and do it in a really smart way and use verbiage that's elegant
yeah,
and really pertinent. And that's a time saver, right? You would still review it to make sure whatever AI is saying eh, jives with what you would say.
yeah.
But what I love AI for is it takes that initial draft off of my plate because
Right.
I'd rather edit something than create something. Now, the place that we're actually using AI a lot right now, and it is like magic. It's like unbelievable.
Yeah.
Is for creating presentations. So I do a lot of presentations. I've been fortunate enough now to do regular quarterly presentations for the New York Public Library. So I'm always having to create
Oh, that's
content.
fun. Yeah,
It's a ton of fun, and but it's very time intensive.
yeah.
So I was like, let me try this out. And I came across this one tool. I think it's called Beautiful AI or something like that. And I think there's a
Okay.
few like that also. And I was like, let me just try this. Got the trial. And I was like, put together a presentation about the importance of dealing with a fiduciary advisor. And it put together a really beautiful PowerPoint, better than I ever create. Like mine are just like
Yeah.
text and excuse me, I'll try to put in like a little clip art somewhere and it looks
Yeah. Yeah.
really childish. But
Yeah.
this was a really nicely laid out presentation.
Yeah.
And the verbiage was good, not great, but good.
Yeah.
But I tell you what, I had this 20-page presentation done like that. And it took me 20 minutes to edit to make it
Wow.
come like it came out of my head as opposed to AI. That's so useful because that
Yeah.
right there easily saved me 2 or 3 hours, right? So what would have taken 3 hours and looked not nearly as good took me 20 minutes, soup to nuts, and I was completely done. So creating presentations and just writing little blurbs. So for example, the promo that I would put on social media for this presentation I'm about to do, I was like, just write the promo, and it wrote the promo. And again, all I have to do is edit it.
Yeah.
That's something that you could use right now as an advisor, and I get a lot of use out of that.
Yeah. It's great. It's great. And I've heard some similar things, and we do the same thing here. Just recently came across a new company called Safer, which is really free promotion for them, right? But it's got to be something that's interesting for firms like yours and others. Compliance is a real slow piece for many advisory businesses, especially when it comes to marketing, right? It takes a while to review what you're setting up. If you produce a podcast or whatever, or you're creating any type of print piece or what have you. So Safer basically is a technology where it's a large language model of marketing stuff that for financial firms. It's been all uploaded into the AI, and now your compliance team can basically take anything that's been submitted to them, goes into Safer, and it reviews it against 30 years of history of everything that's ever happened and comes back and goes, hey, here's the things you might want to review. So to your point, it doesn't actually do the full compliance review and do approval or not approval, right? The compliance officer still has to do that. But they just got like hours and hours of their life back. Right? Just like,
I love,
hey,
I'm going to check that out because that sounds like a great tool and a great use case for AI. I could really see that being very helpful for compliance reviews.
I think it's awesome. Like, so there's gonna be lots of little things like that. Like, think about what takes you a long time just because it's tedious. Like wade through lots of data or read through a whole bunch of stuff, or let your brain get going enough to make a presentation, right? Think of those types of things. Chances are there's going to be an interesting tool to help you out.
Absolutely.
Well, this has been fantastic. It's awesome to see you as always. Well, make sure we get the Sovereign Wealth site linked up, the goRIA site linked up. Also, you're doing a podcast for goRIA.
Yeah.
Good stuff. Love it.
Thank
Following along myself. So this is great, dude. Anything else you want to plug before we let you go?
No, man, I'm all plugged out. This was great, Mike. I do a lot of these, and I really, really enjoy this. You do such a great job, and again, if this is work, I'll work like this all day long. This is great work to do, and I really appreciate you having me on.
My pleasure. Thanks, sir.
All right, thank you.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge props to my man, Chuck Failla, for coming back on the show and all the amazing work he's doing with goRIA. As you heard him say in the show, it's not 100% altruistic, but it is kind of like 99%, right? He's like, rising tide lifts all boats. Let's give back to the community. If it ends up translating to some business for Chuck in Sovereign Wealth Group, fantastic. It's kind of what we're doing here. If this translates to business for us at Finserv Marketing and Podbox, awesome. But I hope you're getting value out of it no matter what. Okay? That's all I have for you today. Be nice to each other. We'll see you next time on the Modern